Good day and welcome to today's Friday's tutorial session. With me, Janis at Dukascopy Analytics, I'm going to be explaining actually a topic. I'm not going to be showing a lot. The topic of today is, as you can see, is introduction to indicators and backtesting. The thing is that a lot of people don't understand Forex indicators as a concept, what they do, and the backtesting. They do not understand how can there be some sort of line. For example, here on my chart you see a lot of lines. How it can be that if the currency exchange rate just crosses a line from the above or to the below, and they kind of don't know why is that a sell or buy signal and what does it mean. So I'm going to be doing the common kind of explanation with a couple of comments by going through what we use on the Dukascopy standard chart that is shown to the clients non-stop. So the thing is that with technical indicators, usually there is some sort of theory behind it. If you're watching, you can just be using and trading one indicator. What you do is that we're going to be using the example of the 55 and 100 SMA and the basic theory that many know, that if the 55 SMA crosses the 100 SMA, it signals buy or sell signal. So we're going to be going through that example, and then I'm going to be adding a couple of comments, and if anyone is interested, remember, and if you're not watching the stream, use the chat. If you're right now here, use the comments. If you're watching in the future, chat if you're watching it now. Got mixed up. So the theory is that if the 55 SMA crosses the 100 SMA, because of the fact that the 55 SMA is the simple moving average, it just shows what is the price for the last 55 periods on average, and the 100 does the same for 100 last periods. So the theory is that if the 55, for example, as you can see here in this is the oil chart at the moment, if the 55 hour crosses the 100, it signals a buy signal, in the case that it means that the short term momentum is higher than the going upwards above the medium term momentum, and it signals kind of that, yeah, you should be buying, because in the short term it indicates that it should be going upwards. So the thing is that, okay, someone tells you this, and you always for each indicator, if someone tells you something like that, use this thing, use this, that, you ask, always remember, ask why, and that's where backtesting comes in. I just noticed that on this PC that we use for the streams, I don't have even the basic Excel, but I'm gonna be explaining the theory then. The thing is that you need to have a percentage success rate, and that is done like this. You take a period of time. For example, at the moment I would be preferring using for each of these 1 hour indicators, pivot points, or anything, the period since last big fundamental changes in the monetary system took place. I went kind of there into the off zone, but basically February 2018. Since that time, the big central banks are doing something else, and the environment in the background has been the same for this period. In general, they have been hiking their rates. So what you do is, on a simple, the most basic explanation is going to be, you take on Excel the hourly candle data for that year. Excel can handle 80,000, if I remember correctly, entries in a table, and you need a pretty hardcore processor to do that. So what you do is you set all the hourly information in a big table there, the price changes, and you have also the data for where you get two tables next to it. Where was the 55 hour SMA, and then where was the 100 hour SMA, and then you create a simple script which states, if the 55 and the 100 hour SMA are at the same point and they kind of go upwards, and for example in the 55 cross it from the downside or from the upside, you kind of, here's where coding comes in. Most guys do it in Python because then you can handle a lot more data, but in simple coding can be done even if Excel. Don't hit me, programmers, don't hit me, but it's still an if case. So you build that it tests for you what is the, and how you just test that it simulates a situation that under these circumstances of it crashing it from the downside to the up, that you would be buying, how big would be your profit, for example, and if it goes from the upper side to downside, that you would be selling, how big would be your profit. You can create that, but that takes additional work. In general, you would just check whether yes or not the rate went down afterwards. You program that. You sit on it for hours and you program that. And then eventually, afterwards, you check all these cases. All of these cases when it crossed it, you will know how many there were because the script will flag them for you. It will show it to you. And then how many times the statement that if it crosses it from the upside to the upside, from down to above, how many cases if you buy you would have the rate went up and the other way around, and it at the end result you have percentage, simple percentage that shows in how many cases it was true, and that's the success rate of a technical indicator. And with any indicator that you are testing or some sort of hypothesis, some thought that came into your mind, you just take all the historical data and apply the technical indicator for that time, for that case, and you just check it and you get a percentage at the end. So that's what actually the algo guys are doing. That's how you create an algorithm. You backtest, and then you know the percentage historical success rate of this indicator of this method. And then you are, the fun fact, as it is kind of said by in one interview by a very popular trader who does all the backtests, is that I know the percentage I am taking. In casino, you're taking, for example, 60% chance that casino is going to win, 40 that you're going to win. In this case, for example, he says, imagine I programmed something with a couple of indicators and I see that their success rate is 80%. I'm taking the 80% and the market is having the 20%. It doesn't matter if I do the trades 100 times, 80% of the times I'm expecting to win. So if it's 1 against 1, I'm gonna make 80 bucks and lose 20, so 60 bucks is the one that I'm making. So that's how initially indicators and backtesting work. If you're doing the real work, real day to day. When you're a retail trader, when you find out about any indicator, ask for the backtest results and ask for the kind of test portfolio. For example, on my LinkedIn profile, I have a mathematician, can't remember the country, it was Southern Eastern Europe country, who he is leading a firm, a team of analysts who are making these systems and portfolios, and that's the automatization they are doing, and they are legit. I haven't checked their data, of course, because I'm not interested in his algo, but he's legit showing, first thing he's showing the success rate and the portfolio. And if someone is telling you this indicator works, that, ask him for a portfolio. And if he is asking you for money for it, first thing, evaluate how profitable is that indicator, whether he is asking you less money that the indicator can make you, because if it's the other way around, it's a scam. So these scams are all over, by the way. And you need to kind of see whether it's a legit person, whether it's a firm or some strange WhatsApp, Telegram chat. Those guys usually are cheat schemes that they get you to a certain broker to lose your money to a certain broker. They get percentage for that. That's also a thing. So with indicators, it takes a lot of aspects to actually evaluate whether you can use it or not. But the most simple way, if you get an indicator, is that you see it and you script it, you create it. For example, recently a guy asked, can he in JForex can he have added one certain indicator? We added it, and he is making a script that he's going to be buying when it's above it, price is above it or below it. And he kind of makes it, and first thing he's going to do is he's going to just let it work on a demo platform for some time. If you're not using backtesting, allow it to work on demo and see whether it's actually gaining profit or not. But creating a backtesting system takes a lot of work, and it can be done. Of course, there are pre-backtest systems, and I think that some online pages also offer the services to backtest your theories, but that also costs money. Remember, all work costs money, or you can do it yourself. So you do that as a retail trader. If you have any comments on this topic in general, I wanted to pick it up in a short video today. I don't have clear examples, etc., because they take a lot of time, and I don't have them. I haven't been making them for quite some time, but we needed to get this out of the way because I mentioned them. I mentioned algos. For example, data release. If data release, for example, releases something like data is above something like 10 pips, like backtest can either show if the data is higher than the forecast by 0.1%, whether the move is going to be 10 pips. Someone backtests that and then builds a strategy around that. So that's all about automatization and algos and stuff. So we needed to have this here. So any questions, any topics, if you have encountered algos as such, then type away. And I'll see you next week on Monday on the 12 GMT weekly economic calendar analysis webinar.